Welcome to the deep dive. We're your shortcut to getting properly informed. Today, we're cracking open the latest Q1 FY26 earnings from Voltas Ltd. That's the first quarter ending June 2025. They're a huge player in India, right? Air conditioning, engineering solutions, and we're going beyond just the headlines here. We've got the official financials, the press releases, the actual earnings call transcript. Because, imagine this. You've got totally unseasonal weather hitting right during your peak sales time. And on top of that, you're trying to beat last year's incredible record-breaking numbers. I mean, most companies would just struggle under that kind of pressure.
That's exactly right. And our mission here really is to understand how Volta's a market leader. Remember how they navigated this. It wasn't just about survival. It seems like they might have actually strengthened their position despite these, well, significant headwinds. We want to unpack what the numbers really mean, for their market standing. And maybe pull out some lessons for any business, really, about responding when things don't go to plan. The goal is, like you said, give you that clear picture without getting lost in all the financial jargon.
Okay, so let's talk about that perfect storm you mentioned. What was the biggest curveball in Q1 FY26? What made it so tough, especially for a company that depends so much on, temperature-sensitive stuff like ACs?
Well, the number one thing undeniably was the weather. India had this late start to summer, then it was milder than usual, and it ended quite abruptly. That directly impacts the unitary cooling products segment. It's ACEs, air coolers, the main stuff. And like you said, this was slammed right up against a very high base from Q1 last year, which had seen record sales. So the comparison was always going to look rough.
Right, tough comparison.
Exactly. And then if you zoom out a bit, look at the broader economy based on the sources. Well, the IMF's projecting global growth around 3.0% for 2025, but it's shaky. You've got trade policy uncertainty, geopolitical stuff flaring up, uneven inflation, especially in the U.S. It all dampens confidence. And domestically, here in India, the consumer durable sector itself saw some headwinds. Growth actually went negative in May 2025. Things like tighter credit, even lower electricity consumption, they all hinted demand for cooling products might be soft. And even though the RBI, the Reserve Bank of India, tried to keep a pro-growth stance, spending on non-essentials, that discretionary consumption, is still pretty fragile. So yeah, Voltas really faced a combination punch, bad timing with the weather internally, and a more challenging economic climate externally.
That really paints a picture. Okay, so with that backdrop, you'd think Voltas would be seriously struggling, right? But it sounds like the story isn't quite that simple. The headline financials might show one thing, but their market position, maybe something else. Tell us a bit more about what actually happened on the financial side first.
You're right, it's nuanced. Financially, yeah, there was definitely an impact. Their consolidated total income, it dropped to about 4,020 crores. That's down from over 5,000 crores the previous year.
Wow, quite a drop.
It is. And net profit took a bigger hit, down to around 140 crores from 335 crores. So earnings per share, the EPS, fell from over 10 to 4.25.
Okay, so profits nearly half. That does sound dramatic.
It does. But, and this is really fascinating, despite that significant dip in the top and bottom lines, Voltas held on to its #1 spot in room air conditioners. Their market share for the year up to June 2025 was 17.8%. It actually ticked up to 19.3% by the end of June.
Hang on, 19.3%. That's almost the same as the average they had in the record quarter last year, right? Which was 19.5%.
Exactly. Very, very close. So this tells you something important. It's less about a company in free fall and maybe more about one with real resilience. It points to enduring brand trust, strong relationships with their sales channels, basically the ability to weather a storm when the overall market is tough.
That is impressive, holding on to market share like that in those conditions. Wow. But you mentioned nuances. Where else did they show strength? I think their joint venture, Voltas Beko, had some interesting results.
Oh, absolutely. Voltas Beko, their home appliances JV, was a real standout. While the main AC business was facing those weather headwinds, Voltas Beko saw, get this, 33% year-on-year volume growth.
33%.
Yeah, they sold close to 1 million units. That's huge. And they're clearly grabbing market share, hitting 8.6% in washing machines, 7.2% in refrigerators. It really shows their diversification strategy is, well, working. It's providing a buffer.
So it's not just a one-trick pony focused only on ACs.
Not at all. And it wasn't just Beko either. Their other big segment, the electromechanical projects and services MEP, that performs steadily. They have a really healthy order book there, over 6,200 crores. That gives them good visibility for future revenue.
Okay, so projects are stable.
Yes, and even the smaller engineering product segment, dealing with operations and maintenance contracts, that provided a stable baseline too. So you see, even with the consumer market being challenging, These other business pillars provided, stability and even growth in Becco's case.
Okay, so let's piece this together. Q1 FY26, the numbers dipped mainly because of that weird summer late mild short hitting their cooling products, and that was made worse by comparing against last year's massive quarter. But it sounds like Voltas isn't just sitting back, they have a plan, an outlook for recovery. What are they focusing on now?
That's right. They definitely view this as temporary. Management seems cautiously optimistic. They're working on getting inventory levels back to normal. That's key. And they're implementing what they call tactical cost control measures. For example, in that cooling products division, because factories weren't running full tilt due to lower demand, they had something called underabsorption of fixed costs.
Meaning each AC unit produced cost more because the factory overheads were spread over fewer units.
Exactly. So they're tackling that, along with higher warehousing costs because they had to scale back factory operations a bit. Looking ahead, they're hoping for a demand boost during the upcoming festive season, and there's even talk of a potential second summer in some parts of India later in the year, which could help shift some remaining stock.
A second summer. Interesting. What about regulations? Anything changing there?
Yes, that's important too. There are revisions coming to the Energy Star labeling regime later this fiscal year, so Voltas is preparing for that. It might involve some value engineering, basically, tweaking designs to maintain efficiency and quality while managing costs. And they hinted that some price increases might need to be passed on to consumers eventually. Overall, management's current outlook for the whole industry seems to be somewhere between flat and maybe 5–10% growth by the end of the fiscal year.
Right, so cautious optimism seems like the right phrase. Okay, so let's wrap this up. What does this whole deep dive into Volta's Q1 mean for you listening in? Well, I think it's a fascinating look at how a major company, a leader, deals with significant external shocks, the weather, the economy. It shows they can navigate that pressure while, crucially, holding on to their number one market spot. It's about playing the long game, right? Focusing on innovation, executing well, keeping the customer central, even when the quarterly numbers take a temporary hit. It really underscores that leadership isn't just about posting massive profits every single quarter. It's also about that consistent brand trust and having a diversified business that can handle bumps in the road.
Well said. And it does leave us with a thought to chew on, doesn't it? Consider Voltas's ongoing investment in innovation. We're talking about IoT-enabled products and AI-enabled AC series coming up. They're already moving towards predictive maintenance for their commercial units. So thinking about the future, with increasing climate volatility making weather patterns less predictable and the constant push for energy efficiency, how much will these smart technologies shift from being, nice-to-have features to being absolutely essential? Could this be what market leaders like Voltas need to really thrive and deliver consistent value, not just relying on hoping for a second summer, but truly mastering efficiency and performance across all seasons? Makes you think, right?